Ever feel like real estate investing is a game you just can't afford to play? Well, today we're going to break down a strategy that could unlock some serious opportunities way beyond your own zip code, especially if your local market feels completely out of reach. Does this question hit a little close to home? Maybe a little too close? You see the headlines, right? You track the prices in your own neighborhood, and it's so easy to start wondering if getting into the property game is even possible anymore. And hey, if you feel that way, you are definitely not alone. When the price to just get in the door in your own city is sky high, it feels like the opportunity has just passed you by. But here's a thought. What if the best opportunities aren't in your backyard at all? This is where we need to kind of shift our thinking. Investing out of state isn't just a workaround. For a lot of people, it's a genuinely smarter strategy to build wealth through real estate. So, what are the real perks of looking further afield? Well, for one, we're talking about potentially much higher returns, simply because your money goes a lot further. It also means you need a much lower pile of cash to get started. Plus, you get to diversify across different economies, which, is just a super savvy way to manage your risk. So you're probably asking, where exactly are these opportunities? Let's zoom in on one specific market that's on the radar of a lot of savvy investors right now. We're talking about Detroit. This is a city that is right in the middle of a major comeback story, and that creates a really unique window for investment. So what makes Detroit so special? Well, our sources point to a few key things. It's a top market for single-family rentals, it's seen really rapid property appreciation, and get this, some analysts are even comparing its growth potential to what Los Angeles looked like back in the late 90s. That is a powerful, powerful comparison. Of course, the big question is always, how in the world do you manage a property from hundreds or even thousands of miles away? Well, the answer lies in something called the turnkey model, where a full-service partner on the ground handles absolutely everything for you. I love this philosophy from the BNIC network. It really sums up the whole approach to risk. It's not about swinging for the fences and maybe striking out big. Nope. It's about hitting those singles and doubles, just consistent, reliable returns. This is a strategy built for steady, long-term performance. So let's see how this works in the real world. The process is broken down into 4 really clear steps. They find and buy the property, they fix it all up, they place a great tenant and manage them, and then they handle all the ongoing support and distribute the profits to you. It's designed from the ground up to be a completely hands-off experience for the investor. And this image, wow. It really captures the transformation. It shows you exactly what that renovation step looks like, taking a property that needs some love and turning it into a rent-ready, valuable asset for your portfolio. All right, let's get to the part I know you've been waiting for. The numbers. What kind of financial outcome can a model like this actually produce? Okay, get ready for this. For a traditional investor, putting in around $50,000, the typical return on that investment in just 6 months is 30%. Just let that sink in for a second. That is a powerful figure that really shows you the potential here. But let's move beyond typical and look at a real-world example to make this concrete. Take a look at this property right here on Mackay Street in Detroit. An investor from Los Angeles put in a total of just under $53,000 to acquire and rehab this property. That was back in March of 2023. And here is the bottom line. After all the operating costs were paid in 2024, the property generated a 13.85% cash-on-cash return. So what's that mean? It means for every single dollar the investor put in, they got nearly 14 cents back in pure profit that year. These are real numbers from a real property, and it just proves the model works. Now, what's so great about this whole thing is that there isn't just one way to get involved. The model is actually designed with different entry points, depending on your capital and your goals. As you can see, there are a few different paths. You've got the traditional investor we've been talking about. Then you have these retail options. This is where you can either buy a fully completed turnkey property or, and this is a real game changer, you can become a partial owner in one. You'll see that term cap rate there, which is basically just a way to measure the property's annual return. And that partial ownership path is incredibly accessible. You can actually get started as a limited partner in the company that owns the property with a minimum investment of just $500. This really lowers the barrier to entry for real estate investing. So, this leaves us with a final thought. In a world of crazy high local prices, maybe the smartest move isn't to keep playing in a possible game at home, but to change the game entirely. Could your next great investment be waiting in a market you've never even considered?